put your phone or device aside and immerse yourself in this audio story. Perfect for listening on the move, while relaxing, or for bedtime listening. We release new stories daily, so make sure to like and subscribe to not miss out. This story is based on true events. The $10 trillion secret nobody's allowed to question. There's a company that controls more wealth than most nations on Earth. A financial empire so vast, so deeply embedded in the machinery of global power, that it shapes the fate of governments, corporations, and the very economy you depend on. Yet most people have never heard its name spoken aloud. It doesn't seek headlines. It doesn't crave fame. It operates in the shadows of Wall Street, quietly accumulating influence over $10 trillion in assets, more money than the GDP of every country on Earth, except the United States and China. This isn't a conspiracy theory. This is Blackrock. And by the time you finish listening to this dark business story, you'll understand why some call it the most dangerous company in the world. The question isn't whether Blackrock owns a piece of your life. The question is, how much? Our story begins not with a bang, but with a whisper. A quiet conversation in 1988 between a man who'd just been fired and a vision that would reshape global finance forever. His name was Larry Fink, and he'd just made a $100 million mistake at First Boston that cost him everything: his reputation, his position, his future. But Larry Fink wasn't the type to accept defeat. He was the type to build an empire from the ashes of humiliation. What happened next would create a corporate scandal so subtle, so ingenious, that most people still don't understand. They're living inside it. Fink gathered 7 partners in a small office with a revolutionary idea. What if you could build a company that didn't just manage money, but controlled the flow of capital itself? What if you could create a machine so sophisticated, so essential to the financial system, that governments and corporations would have no choice but to depend on you? They called it Blackrock, a name as dark and immovable as the ambition behind it. The initial capital, a mere $5 million from Blackstone Group. Within 3 decades, that seed money would metastasize into the largest shadow bank on Earth, a financial leviathan with stakes in almost every major corporation you can name. But here's where the story turns cold. Blackrock didn't just want to manage money. It wanted to own the infrastructure of investing itself. While other firms competed for clients, Blackrock built something far more insidious: a technological weapon called Aladdin. Aladdin isn't just software. It's a risk management system that monitors and controls over $21 trillion in assets across thousands of institutions worldwide. Think about that number for a moment. $21 trillion. That's nearly a quarter of the world's financial wealth flowing through a single proprietary system controlled by one company. Blackrock doesn't just predict market movements, it creates them. When Aladdin's algorithms detect risk, entire markets shift. When it reallocates capital, industries rise and fall. And here's the truly chilling part. Nobody outside Blackrock knows exactly how it works. The code is classified. The methodology is secret. It's a black box controlling the fate of nations. By the early 2000s, Blackrock had positioned itself as the indispensable middleman of global finance, the company too connected to fail, too embedded to regulate, too powerful to challenge. But the real business thriller was just beginning. September 2008. The global financial system is collapsing. Lehman Brothers implodes. Bear Stearns vanishes overnight. AIG teeters on the edge of annihilation. Banks that had stood for a century are evaporating like morning fog, and the world watches in horror as $10 trillion in wealth simply disappears. Millions lose their homes. Retirement accounts are decimated. The American dream is foreclosed and auctioned to the highest bidder. But while the world burned, one company saw opportunity in the ashes. The US government, desperate and drowning in toxic assets it didn't understand, turned to the one institution that seemed to comprehend the labyrinth of derivatives, mortgage-backed securities, and financial weapons of mass destruction that had destroyed the economy. Blackrock. The Federal Reserve Bank of New York hired Blackrock to manage the bailout of Bear Stearns and AIG, an unprecedented move that handed a private corporation the keys to the largest government rescue operation in history. BlackRock would decide which assets to buy, which to sell, and ultimately, who would survive and who would die in the new financial order. Let that sink in for a moment. A private company, not elected, not accountable to voters, operating in the shadows of public scrutiny, was given control over the restructuring of American capitalism itself, and they charged handsomely for it. But the money was never the real prize. The real prize was access, influence, power. BlackRock emerged from the 2008 financial crisis not as a victim, but as a kingmaker. While competitors bled and died, BlackRock grew. In 2009, they acquired Barclays Global Investors for $13.5 billion, a move that instantly gave them control of iShares, the largest ETF platform in the world. Suddenly, BlackRock wasn't just managing money for the wealthy elite. They were managing the retirement savings of ordinary people through index funds and exchange-traded funds that promised simplicity and safety. Millions of Americans, traumatized by the crash, handed their financial futures to BlackRock without realizing it. But here's the dark twist at the heart of this business scandal. BlackRock's index funds don't just passively hold stocks. They vote them. When you own shares through a BlackRock ETF, you've given BlackRock the voting rights to those shares. And when BlackRock holds major stakes in thousands of corporations, Apple, Microsoft, Amazon, ExxonMobil, JP Morgan Chase, Pfizer, Coca-Cola, they effectively control corporate America's boardrooms. They decide executive compensation. They influence mergers and acquisitions. They shape corporate policy on everything from environmental standards to labor practices. But the most disturbing revelation came from a 2017 academic study that sent shockwaves through the few people paying attention. BlackRock, Vanguard, and State Street, the big three passive investment firms, collectively own an average of 20% of every company in the S&P 500. In some industries, their combined ownership exceeds 25%. This isn't just market influence. This is a quiet monopoly, a shadow oligarchy operating in plain sight behind the facade of passive investing. And here's where it gets darker. BlackRock holds major positions in competing companies within the same industries. They own pieces of Delta, United, and American Airlines simultaneously. They own Coca-Cola and Pepsi. They own JP Morgan and Goldman Sachs. They own Pfizer and Johnson & Johnson. When you own all the players in the game, competition becomes theater. Some economists argue this has led to reduced competition, higher prices, lower wages, and less innovation. Because why would companies aggressively compete when their largest shareholders profit either way? This is the hidden machinery of modern wealth and power, a system where the illusion of market competition masks the reality of consolidated control. And nobody elected BlackRock to this position. They simply took it. If you want to understand how BlackRock became untouchable, you need to understand the revolving door between BlackRock and government, a corporate scandal hidden in the open, normalized through decades of quiet corruption. When Joe Biden won the presidency in 2020, he didn't just bring in a new administration. He brought in BlackRock. Brian Dees, a former BlackRock executive, became the director of the National Economic Council, effectively the president's top economic advisor. Mike Pyle, BlackRock's global chief investment strategist, became chief economic advisor to Vice President Kamala Harris. Wally Adeyemo, a former BlackRock executive, became Deputy Secretary of the Treasury. Suddenly, the people crafting America's economic policy weren't just influenced by BlackRock, they were Blackrock. But this wasn't unique to Biden. The revolving door spins both ways and across party lines. BlackRock executives have cycled through Republican and Democratic administrations alike, embedding themselves in the machinery of regulatory capture. When the government needs financial expertise, they call BlackRock. When BlackRock needs favorable policy, they call their former employees now sitting in positions of power. It's a closed loop, a system designed to ensure that no matter who wins the election, BlackRock wins the policy game. Critics call it a shadow government. Defenders call it expertise. But whatever you call it, the result is the same. BlackRock operates beyond the reach of democratic accountability. And then COVID-19 hit. March 2020. The world locks down. Markets crater. The Federal Reserve, facing economic apocalypse, announces an unprecedented intervention. They will buy corporate bonds directly for the first time in history to prevent a complete financial collapse. And who did they hire to manage this multi-trillion-dollar operation? BlackRock. Once again, at the moment of maximum crisis, the government turned to BlackRock to decide the winners and losers of capitalism. They were hired to purchase corporate bonds and mortgage-backed securities on behalf of the Fed, essentially printing money and directing it into the markets. But here's the business crime hiding in plain sight. BlackRock was simultaneously managing funds that owned the very securities they were buying on behalf of the government. They were on both sides of the trade, the buyer and the seller, the regulator and the regulated. The conflict of interest was staggering, and yet it barely made headlines. A few progressive politicians raised alarms. Elizabeth Warren called it alarming. AOC demanded answers, but their voices were drowned out by the machinery of normalization, by the sheer overwhelming complexity of the financial system that makes corruption look like competence. While small businesses died by the thousands, while unemployment skyrocketed to Great Depression levels, BlackRock orchestrated one of the largest upward transfers of wealth in human history. The stock market, disconnected from the reality of human suffering, soared to record highs, enriching the asset-holding class while the working class drowned. BlackRock's assets under management grew from $7 trillion to over $10 trillion in just 2 years. They made billions while the world burned. But the darkest chapter of BlackRock's pandemic story is written in the housing market, a financial mystery that's reshaping American life right now. Starting in 2020, institutional investors, with BlackRock leading the charge, began buying up single-family homes at unprecedented scale. Not apartments, not commercial buildings. Houses, the homes that families used to buy to build generational wealth, were being snatched up by Wall Street algorithms, often sight unseen, paying cash and outbidding ordinary people who needed mortgages. In cities across America, Phoenix, Atlanta, Charlotte, Las Vegas, Tampa, BlackRock-backed funds purchased thousands of properties, converting them from owner-occupied homes into rental units. The American dream of home ownership was being systematically financialized, transformed into an asset class for billionaire wealth preservation. Young families found themselves priced out of neighborhoods where they grew up, forced into permanent renting, while BlackRock collected the profits. When confronted about this, BlackRock played semantic games. "We own very few single-family homes," they said. Technically true in the sense that they don't directly own them. Their investment funds do. But that's like saying a puppet master doesn't control the puppet, because technically it's the strings doing the work. BlackRock manages the capital, directs the strategy, and profits from the returns. They engineered the financialization of housing while denying responsibility for the consequences. This is the hidden cost of Blackrock's empire, the quiet transformation of American capitalism from a system where you could work hard, buy a home, and build a life, into a neo-feudal economy where you rent everything from landlords you'll never meet, paying tribute to algorithms that care nothing for your dreams. But BlackRock's power play doesn't stop at owning your home and your retirement. They want to own your values too. In recent years, Larry Fink became the world's most visible advocate for ESG investing, environmental, social, and governance criteria that promised to align profit with purpose, to make capitalism responsible, to save the planet through market mechanisms. His annual letters to CEOs became manifestos demanding corporate action on climate change, diversity, and stakeholder capitalism. Every company must benefit all of its stakeholders, Fink wrote, positioning BlackRock as the moral conscience of capitalism. It was brilliant marketing. It positioned BlackRock as the good guys, the responsible stewards, the enlightened capitalists trying to fix the system from within. But scratch the surface, and you find the same old story. Money and greed dressed up in the language of virtue. BlackRock continued to hold massive stakes in fossil fuel companies while claiming to fight climate change. They voted against strong climate resolutions at shareholder meetings while giving speeches about sustainability. They marketed ESG funds to socially conscious investors while simultaneously managing funds that profited from the very industries those investors wanted to avoid. They played both sides, collecting fees from everyone: the oil companies, the green investors, the activists, the deniers. And when ESG became politically controversial, attacked by Republicans as woke capitalism and by progressives as greenwashing, BlackRock quietly backed away from the term while continuing the same practices under different branding. They never actually cared about the environment or social justice. They cared about market positioning, about capturing flows of capital from every ideological direction, about being the indispensable middleman for every tribe in the culture war. This is the psychology of institutional power at its most refined, the ability to appear to stand for everything while committing to nothing, to profit from every position without taking a real stance on anything that might threaten the bottom line. So where does this leave us? Today, BlackRock manages over $10 trillion in assets, more than the annual GDP of every nation on Earth except two. They are the largest shareholder in 90% of S&P 500 companies. They own stakes in virtually every major bank, every tech giant, every pharmaceutical company, every defense contractor, every media conglomerate. They are embedded in the infrastructure of every major government, with former executives holding key positions in administrations across the political spectrum. Their Aladdin system monitors and influences $21 trillion in global assets, making decisions that affect the jobs, homes, and futures of billions of people who have never heard the company's name. BlackRock isn't just too big to fail. They're too big to regulate, too big to audit, too big to understand. They've built a machine so complex, so interconnected, so essential to the functioning of global markets, that even if governments wanted to rein them in, they probably couldn't without risking systemic collapse. This is the final lesson from BlackRock's rise. True power doesn't come from controlling governments or corporations directly. It comes from controlling the infrastructure those governments and corporations depend on. It comes from being the invisible hand that moves markets, that allocates capital, that decides which companies live and which die. It comes from building a system where your success is everyone else's dependency. Larry Fink didn't set out to rule the world. He set out to make himself indispensable to it. And in that distinction lies the blueprint for how modern empires are built. Not through conquest, but through consolidation. Not through force, but through finance. Not through visibility, but through the shadows. Critics warn that BlackRock represents the endgame of neoliberal capitalism, a world where democratic governance is rendered irrelevant by the sheer concentration of private economic power, where your vote matters less than your portfolio, where citizenship is replaced by shareholding, and where the many are governed by the interests of the few who control the capital flows that determine everything else. Defenders argue that BlackRock simply provides efficient market services, that they're managing money on behalf of ordinary people's retirement accounts, that their size is a natural result of success in a competitive marketplace. But this defense ignores the central question. At what point does too big become too powerful? At what point does the concentration of economic control become a threat to the very idea of a free market, let alone a free society? The most terrifying part of this business documentary isn't what BlackRock has already done. It's what they're positioned to do next. As artificial intelligence reshapes the global economy, as climate change forces trillions in capital reallocation, as geopolitical tensions redraw the map of economic power, BlackRock sits at the center of every transformation, not as a participant, but as the architect. Their algorithms will decide which green technologies get funded. Their voting power will determine which companies survive the transition to renewable energy. Their risk models will shape which nations receive investment and which are left behind. And here's the question that should keep you awake at night. Who watches the watchers? Who regulates the regulators? Who holds accountable an institution that has embedded itself so deeply into the machinery of global capitalism that it has effectively become part of the state apparatus without any of the democratic oversight that theoretically constrains state power? The answer, as of now, is nobody. BlackRock operates in a regulatory gray zone, too diffuse to be called a monopoly, too systemically important to be broken up, too technically complex to be easily understood by the politicians who would need to rein it in. They've perfected the art of being simultaneously everywhere and nowhere, present in every major market decision, yet invisible to public scrutiny, essential to economic stability, yet accountable to no democratic process. This is the genius and the danger of modern financial power. It operates beyond the reach of traditional political categories. It's neither left nor right, neither capitalist nor socialist in any classical sense. It's something new, a hybrid form of concentrated private power that functions like a shadow state, making decisions that affect billions while answering only to the logic of capital accumulation and the interests of the ultra-wealthy elite, who benefit most from asset price inflation. Perhaps most disturbing is how BlackRock has made itself appear inevitable, natural, even beneficial, as if the concentration of trillions of dollars in the hands of a single institution is simply the rational outcome of market efficiency, rather than a carefully constructed system of power. They've normalized their own dominance through the language of passivity, of index funds, of democratized investing. We're just giving ordinary people access to markets, they say, while simultaneously using those ordinary people's money to amass corporate control that those same people have no say over. The average investor buying an ETF thinks they're making a simple, smart financial decision. They don't realize they're feeding a machine that's reshaping capitalism itself, that's determining which companies thrive and which starve, that's influencing everything from drug prices to housing costs to climate policy. The cost of convenience is sovereignty, the silent surrender of economic democracy in exchange for slightly lower investment fees. In the end, the story of BlackRock isn't really about one company or one man. It's about a system that has evolved to concentrate power in ways that would have been unimaginable to previous generations, hidden behind layers of financial complexity that render it nearly invisible to democratic challenge. Larry Fink built an empire not with armies or factories, but with algorithms and influence, with expertise and indispensability. He understood that in the modern world, the real power isn't held by those who own things, but by those who manage the ownership of things, the intermediaries, the platforms, the infrastructure providers who become too embedded in the system to be removed. And so Blackrock sits at the center of global capitalism like a dark star, invisible to most, yet bending everything around it through sheer gravitational force. They don't need to announce their power. They don't need to make threats or demands. Their power is structural, baked into the architecture of modern finance itself. Every time you check your retirement account, every time a company announces a new policy, every time a government intervenes in markets, every time housing prices rise beyond reach, every time you wonder why the economy seems rigged in favor of those who already have everything, there in the shadows, you'll find Blackrock's fingerprints, subtle but indelible, shaping the world according to the iron logic of capital accumulation. The question isn't whether they'll continue growing. The question is, what happens when a private corporation becomes more powerful than the governments meant to regulate it? When the line between state and market disappears entirely? When we wake up one day to discover that the invisible hand of the market has closed around our throats? That's the real business thriller unfolding in real time, hidden in plain sight behind the mundane language of asset management and passive investing and fiduciary responsibility. It's the story of how democracy dies not with a bang, but with a transfer of shares, not through violent revolution, but through quiet consolidation, not by tyrants in uniforms, but by executives in suits who simply made themselves indispensable to the machinery of modern life. Welcome to the age of Blackrock. They don't rule the world. They just own it. And if you're waiting for someone to stop them, you're missing the point. They've already made themselves unstoppable. The empire was built while you were checking your portfolio, consolidated while you were sleeping, perfected while you were looking the other way. That $10 trillion isn't just money. It's power without accountability, influence without oversight, control without consent. And it's growing every single day, silently, inevitably, like a shadow lengthening as the sun sets on the age of democratic capitalism. The only question left is, are you even allowed to ask who gave them permission? Subscribe and listen to our next story below.